Bitcoin whales, owners of over 1,000 BTC per wallet, have dropped to their lowest levels since July 2019. In today's video, we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with Bitcoin and what is going on with that on-chain data. Let's roll the intro and get right down into it. Okay guys, today we are going to be taking a look at on-chain analytics for BTC. So what we're going to do is we're just going to go through all of these tabs. When I say all of them, we're going to go through some of these tabs and we're going to pick out some of the interesting on-chain analytics that help us understand what is going on with Bitcoin's price and where this analysis, these kind of data points potentially lead the price. So obviously here we have the overview. This is kind of really basic stuff. So we have the all-time high at $69,000. We have the date, which was the 10th of November 2021. And of course, we can see that we're down 39.93% at the point of recording. This is been 800 days since our all-time high. And there's 19.6 million BTC in circulating supply. And obviously, we know the total supply is 21 million BTC, right? So nothing overly mind-blowing here in terms of the kind of overview for Bitcoin. But we'll go down a little bit deeper here. There's a few things that are really important that we do talk about a little bit, right? So over here, we can see we've got kind of three columns of data. We've got the addresses, we've got the transactions, and we've got the inflation. And these are really important. Sometimes they get overlooked a little bit, but they give you a pretty decent amount of insight into what is going on with Bitcoin. So let's start on the addresses, right? There are 52.3 million addresses for Bitcoin. This is a really important number, so we'll remember this and we'll come back to that in a moment as we kind of go through some of these other tabs. But 52.3 million addresses exist for Bitcoin. That's unique wallet addresses, 52.3 million. Now, in the last 24 hours, we've seen 806,000 active addresses. So out of the 52.3 million, 806,000 of them have been active in the last 24 hours. There were 628,000 addresses that received Bitcoin and 501,000 addresses that sent Bitcoin, which basically means there's a little bit of overlap if there's only 806,000 active addresses. Some of these wallets both sent and received BTC, but we can see that there's more receiving than there is sending at the moment. So it's an interesting kind of way to look at the market. Over here, we have the transactions, and on the transaction side, we can see in the last 24 hours, there were 461,000 transactions, and the fees that were paid for those transactions were $4.9 million. That basically means 83.78 BTC was used for transaction purposes. There were 132 blocks added, and the block height at the point of recording this video is at 826,470. So it's interesting to see how much Bitcoin is being used for transactions, how much Bitcoin is being earned by miners and so forth. Now, the inflation rate is really important because obviously we do have a Bitcoin halving event coming up, and a lot of people don't really understand the Bitcoin halving event and what that actually is going to do to price. Spoiler alert, it's not really going to do anything. So as we come back down here, we can see that the inflation rate at the moment daily is 0.0045%. The inflation rate yearly is 1.65%. Okay, so new Bitcoin that enters the ecosystem or enters into circulating supply is 825 BTC. Now, we can see here that new issuance in terms of USD value is $34.3 million. Okay, inflation is quite an interesting one. The Bitcoin halving event obviously is going to have an impact on the inflation because it's going to be less Bitcoin that is coming on in. And, you know, we've got 19.6 million Bitcoin in circulating supply at the moment. It's really important because it means that there's only 1.4 million left to be mined through all the mining activity. So halving the rewards isn't really going to halve or make it more difficult for the 19.6 million Bitcoin to flood the market and overpower demand, or for demand to overpower the supply and so forth. So the Bitcoin halving event is a little bit misleading because people kind of look at it and say, look, it's the catalyst for the next bull run. There's going to be less Bitcoin. Well, no, there's less Bitcoin coming out in terms of the inflation, but ultimately there's still 19.6 million Bitcoin out there, and the 1.4 million still to be mined over in Bitcoin's entire life going forward really has very little impact on price at this point. So don't think of the Bitcoin halving event as your kind of golden parachute for Bitcoin. It's actually a big concern of mine in the longer term over the next kind of couple of decades. How is Bitcoin's mining activities going to be affected by Bitcoin halving events? I would not be surprised if a hard fork happens here to save Bitcoin from potentially a really dangerous place. And it'll be interesting to see how the future of Bitcoin kind of unfolds. But we're kind of getting off on tangent here. Let's go on into our wallet analysis. Now, I like the wallet analysis because it's really quite impactful when we actually break down the amount of Bitcoin that is held by specific wallets. Now, here we have 10 different levels to our analysis under the wallet analysis native. Okay, we have the low side, right? The very top row here, 0.001, 0.01, 0.1, 1, and 10. All of this top row here is basically retail investors. You have the really low side, and then you've got the high net worth individuals. But nonetheless, this entire top row, I would liken to retail investors. Okay, they're not institutional investors. They are enthusiasts, maxis, or high net worth individuals that want exposure to BTC. And so we've got everything on this really low side, 0.001 Bitcoin, right? So this is basically counting up how many wallets have at least 0.001 BTC. That is basically 1,000th of a Bitcoin. Okay, so it's basically really, really, really little Bitcoin, hardly any BTC whatsoever. I think at the point of recording this video, it will be around $40 worth of Bitcoin, right? So we know that there's 24.9 million wallets that have 0.001 Bitcoin or more in them. Now, as I said earlier, it was important that we understood this number. There was 52.3 million addresses, total wallets that exist for Bitcoin, but only 24.9 million actually have Bitcoin in them, which basically means less than 50% of the total wallets ever created for Bitcoin actually have BTC in them. And that basically means that actually there's a lot of dead wallets out there. And if you just look at the total number of wallets for Bitcoin, you might be misled into thinking there's growth overall. That's not to say that there hasn't been growth over the years in this particular size wallet, because you can see new wallets firing up and they're holding Bitcoin. And we have seen significant growth over the last year alone. It's up 15.59%, which means some retail investors have thrown some money in there, $50 or whatever, and they're kind of seeing what happens. For the most part, they might have thrown a bit more in there, but as we kind of go up to the next layer here at 0.01 Bitcoin or more, so basically 1% of a Bitcoin, there's only 12.7 million wallets. So out of the 52 million, 12.7% of them have just 1% of Bitcoin, of a Bitcoin, right? So it's really important that we understand this, that actually, although this has got growth to it, 11.39% in the last year, for the most part, it hasn't grown in the last couple of weeks. It hasn't really grown in the last month or so either. So although it has had some pretty decent growth across the years, as you can see here, the black line is the number of wallets growing that have just 1% of a Bitcoin. Ultimately, this is a really small retail-sized wallet, and it does really show that there isn't a huge appetite for BTC. The difference between our 0.001 and our 0.01 is close to basically another 50% drop. So we can see here that there's basically a 50% fall off between total wallets and wallets holding 1,000th of a Bitcoin, and then wallets going down to 100th of a Bitcoin, okay, as in 1% of a Bitcoin, is another 50% drop from the previous. So we can already see that actually investors in BTC is dropping off quite aggressively, as in there isn't really a lot of wallets holding significant amounts of Bitcoin. And as we go up again, we have 10% of a Bitcoin. There's now 4.5 million. Again, over 50% reduction on the previous. So as the higher wealth wallets, as we start to kind of digest those and dissect them down, we can see that the more money that is flowing into Bitcoin is held at wealthier levels. It's not really diverse. It's not filtering down into the smaller levels. Every time we jump up, we essentially are halving the amount, if not more, of the wallets, right? So that we had 52 million total. We then have 24 million. We halve that again. We go to 12 million. And now we're halving that again. In fact, it's more than half. We're at 4.5 million for just 10% of a Bitcoin. As we go up a little bit more to people who own one Bitcoin, we see a 75% reduction in the number of wallets. Again, we're finally at that point where people who aspire to have a single Bitcoin, and this is not necessarily an easy feat for retail investors. Some retail investors who were early enough maybe were able to kind of dollar cost average and build out their positions, and they finally have one BTC. As you can see, there's 1 million wallets that have over one BTC, but they haven't been reacting positively in the last 6 months, and we have to wonder why. Ultimately, retail investors are feeling the pinch. It's harder to grow this level now, specifically as obviously the price of Bitcoin has increased quite a bit. It becomes harder and harder to kind of build out an entire Bitcoin in your portfolio. But for the most part, we can see reductions here. The wallets are actually decreasing, meaning that they're taking profits and these slightly higher ranges. So in the last 30 days, it is down 0.3. In the last 14 days, it's down 0.43%. And in the last 7 days, it's down 0.02%. And then just a day ago, at the point of recording, it was 0.01% down. Ultimately, these wallets are decreasing now as Bitcoin's price starts to come on down. Obviously, the Bitcoin halving event wasn't exactly what people were aspiring to, or wasn't what they were hoping for. They were looking for significant, growth, $100,000 Bitcoin. We haven't really seen that. And obviously, we've seen the 𝗖𝗢 news event that I've been speculating on for quite some time. Now, as we come back into here, we jump up into the 10 Bitcoin or more, we can see that, again, the wallets have dropped down to 154,000 wallets. So now we're talking about high net worth individuals, and the decrease rate here between the real low side and the higher side of retail investors is quite dramatic. We can see that we're going from 1 million down to only 15% of that. So we are basically reducing the number of wallets by 85%. We see 154,000 wallets. And again, there's no positivity to be seen here on the high net worth individuals. As you can see, in the last year, they've been doing nothing but taking profits off the table. This basically is an indication that all of the rallies to the upside that have been seen, they are basically sold into those rallies and basically grabbing the liquidity and basically just passing their Bitcoin on to anyone else who is willing to purchase. So it's really interesting to see here the kind of the take of how people are reacting, obviously at different levels. And for retail investors, you have quite an array of different kind of approaches to this. But ultimately, we have the real low side where they're just throwing a few dollars at the market through to trying to build out an entire Bitcoin. And obviously, high net worth individuals with more than 10 Bitcoin have just been aggressively selling off. And so as we go up into 100 Bitcoin or more, we start entering the world of more institutional level traders and institutional level players. Now at 100 Bitcoin, we can see a reduction, again, a tenfold reduction. We're down to 15,000 wallets at this point. Okay, so only 15,000 wallets now have 100 Bitcoin or more. This basically shows you that there isn't really a significant growth pattern across the kind of the sectors here, or the dissected down wallet counts. Ultimately, we can see that retail investors are just kind of gambling on the market, essentially, specifically at the lower side, and the higher side we can see just not really a lot of activity. In the last year, these guys are down 1.42%, and again you can see very little activity really going on. It's just been sideways trading. Ultimately, the 100 Bitcoin or more, I liken these guys into your day traders. They basically are trading in and out of Bitcoin quite frequently, and that's that. They're not really long-term investors, not in the same way that it was easy to acquire 100 Bitcoin back in the day. But as you can see, we were at 2017, basically 18,000 wallets. And yeah, we basically have come down quite aggressively since then, and we haven't really been able to kind of regain any of that. Now, as we go up into the larger side, and as I said in the intro, the whales at 1,000 Bitcoin or more per wallet are down at their July 2019 levels. They've been aggressively de-risking, coming out of their positions for quite some time, down 2.25% in the last year. There's no positivity to be seen on the chart here. I'm going to zoom in just so you guys can see a better look and view of this, right? You can see that in the highs of 2021, they started to come out of their positions. They kind of pushed up a little bit, but they have been coming out ever since. And they've used the 2023 rallies as exit liquidity in the same way that we saw with those larger high net worth individuals on the retail side. Ultimately, 2023 was a great area for pumps to the upside and liquidity to be provided for the larger investors to exit their positions. We are down at multi-year lows in the number of whales holding Bitcoin. It's not what you want to hear. It's not necessarily the best of news, but it is something that I think you need to be aware of, because we all kind of have those hopes and those dreams that we're going to be moving up into new all-time highs. I find it incredibly unlikely that we're going to be moving up into new all-time highs without the first getting backing from these larger institutional level investors, and specifically the Bitcoin whales. But there is some good news. Okay, so it's not all doom and gloom. The second that we actually move up towards 10,000 BTC or more, we can see some growth in the last 2 weeks. As price started to climb up and we kind of got rejected on the ETF news, we can start to see some growth here for BTC, around 4.76% when it comes to the wallets that hold at least 10,000 Bitcoin, which means there are some pockets of accumulation happening, but I think it's only just the beginning. As we have been talking about for quite some time, ever since November 2022, we have seen the wallets holding 10,000 Bitcoin or more using the 2023 pump to the upside as exit liquidity. And it wasn't really until we started to get into December of 2023 that we actually started to see some accumulation occurring, but it hasn't been straight lines. We saw another sell-off towards the end of 2023 into the January the 10th, 2024. In fact, we didn't see growth until only a couple of days ago, around the 15th of January. So basically, as price starts to pull back down. Now, as I kind of take a look at these wallet counts, it's really quite easy for me to kind of say, look, it's really obvious. The whales are selling and the retail investors are buying. That is what the data is suggesting to us. But I don't think it's necessarily as clean cut as that. All that we generally know here is that wallets that hold a specific amount are either growing or they are decreasing. We don't know for sure whether or not they are selling. And we have seen some inconsistencies with Bitcoin wallets all dropping at the same time. This essentially means that there's a higher likelihood here that Bitcoin is actually being pushed to the exchanges, leaving the wallets and the wallet counts drop. Doesn't necessarily mean that the Bitcoin is being sold off. It just means it's no longer in the wallets that are being counted within the data. And so I think there's a high likelihood here that there is transfers happening, and there are transfers of wealth happening between the wealthy, the institutional level, selling their Bitcoin off to the retail investors during 2023. And I expect that in 2024, at least the first, maybe even second quarter, we're going to see the opposite. We're going to see retail investors selling their Bitcoin and the larger institutional investors buying that Bitcoin back. And they'll be buying it back at a discounted rate. Now, we know that the majority of the Bitcoin was accumulated at around $30,000 BTC. And that means that $30,000 area is going to be a make or break for many retail investors. And you may find an excess amount of selling pressure in that range. Should that happen, there will be cheaper Bitcoin around $25,000. And I think that is where the institutional buys may actually start to come on in. Now, you can let me know what your thoughts are in the comments down below. And you should probably check out this video here where I'm discussing what I think is going on with XRP.